Hey guys, this is a market update. Things are getting really tense right now in crypto. The attention is coming back. The eyeballs are coming back into crypto right now. So it is time to pay attention. We're coming out of this bear market. And also the ETF news is obviously very big. The whole market is now under the impression that these are actually moving forward and are going to be accepted. And so you're going to get these volatile moves. Volatility is coming back and we can trade this. So firstly, when it comes to Bitcoin price action, we're on a clear uptrend, right? You can just see the price action here, just moving onwards. Now, I've got a descending wedge right here, which in an uptrend is a bullish pattern. People would be looking to trade this for a breakout, somewhere around here, right? Now, that is not going to come on technicals, in my opinion. I just think we're trading around the ETF news and everything like that right now, which apparently is going to be coming either towards the tail end of this year, maybe the start of next, according to most people. I'll get onto that in a second. But I just think, it's time to be buying Bitcoin because of what's happening over the next few years. And I'll get onto how the macro is changing as well, because no one's going to tell you the macro changes. The Fed aren't going to tell you that they've changed their stance until much later. So let's have a look at that in this video. If you're a trader, I use Bybit. Check out Bybit. Link in description to a $30,000 deposit bonus. So if you can trade on there, you can get that deposit bonus. Not available for US, UK, but you can check out some other platforms. You can also trade on Apex, which is decentralized futures trading if you are more professional. That is from Bybit as well. So you can check the links in the description for the details. Most market participants now believe the ETFs are coming. All of the news flow is suggesting that. Check out this video from ARK Invest, and then we'll go over the market cycle.
Hopes are rising that a number of Bitcoin ETFs will be approved.
Everybody is assuming at this point that they'll probably approve most of the Bitcoin ETFs by the end of the year. That's a reasonable assumption at this point? They lost the court case. They chose not to appeal it at this point.
I know our final deadline on this filing is January 10th. So what we see here is a little bit of a change in the SEC's behavior. They actually are asking questions, and we provided 5 pages along with our partner of answers to those questions. So progress, we would say, yes.
I still think that the cycle matters and the macro matters. The big flows come in when the Fed debase the currency and print the currency. They are the biggest player in the world. So when they're pumping money into the market, they're basically a buyer of risk at that point, right? And so the money flows in. So we're not going to get a true bull market until they do that. But right now, the ETFs are amazing for BTC and the setup for that next stage, which in my opinion is 2 years from this date. So as you can see, what I've tweeted on Twitter today, or X, is anything under this orange line is under the mid-regression line. That's just me being a buyer here. I'll buy everything under that line, and it doesn't matter on price, it matters on time. For example, right now, if the price was around 40K, I'd still be buying. But if you're fast forwarding a couple of years, that midline would be about 50, 60K, because the network gains value each cycle and drawdowns become higher over time, and the price goes higher over the time as the asset matures. So for me personally, buying under this line is just simple as that. About interest rates though, people are expecting a slowdown in the economy, some sort of slowdown. Again, we don't know the extent of this, but in my opinion, just to see here, inflation and the Fed, this is core PCE in purple, and it is 3.88. This is the Fed funds rate in gray, which is 5.45. And this is the SOFR curve, which is the interest rate curve, which people are trading now. So this is how the market is expecting interest rates to go, as you can see here. This used to be called LIBOR, but then they got rid of LIBOR. So it's SOFR. Anyway, what we can see is that the Fed funds rate is above inflation at this point. The Fed are done. They do not have to raise anymore. The real rates are positive for the first time in a generation. Interest rates are above inflation. You can see here, when interest rates get above inflation, they are done. Why do they need to raise again? Why do they need to raise again? Look at core PCE. It's coming down. Once it's coming down, you don't need to raise rates anymore. You need to be above it to get it coming down, but it is there right now. So what you can see is this SOFR curve is, this very rarely happens. As you can see, what they do, the Fed, is they raise until they're above inflation, which they are, significantly so. This is going to cause a huge slowdown in the economy. Now, on the flip side, you have massive fiscal spending, which is going to prop up the economy. So how all of this is going to play out, I don't know. but the Fed funds rate is above inflation at this point. Usually they will pause for 3, 4, 6, 7, 8 months. We don't know how long. But after that, things get so bad that they usually drop, and they drop quickly, as you can see here. They don't curve it off like this. This never ever happens. Something will happen. You'll get a negative GDP print, or or unemployment will tick up by 1% or 2%, whatever. And they say, hey, we're really done. Maybe we need to support again. In any case, even if that doesn't happen, even if fiscal spending is going to prop us up and not give us a recession, inflation is now way below the Fed funds rate. And so even if they just come down a little bit, not to stimulate, but just to come down, that's going to have an effect on risk markets, and that's going to have an effect on the price of BTC. Bond traders are getting very excited about the short end of the curve. What I mean by this is treasuries, so bills and bonds around 1, 2 years. The short end of the curve, bond traders are saying, hey, this looks like a good investment now, or a good trade right now. Why? They don't want to buy bonds and hold it to maturity and get 5% each year for 2 years. They don't want to do that. What they want to do when you're trading bonds, and there are bond traders, is they're trading the price of the bond. So bonds have gone down in price if yields have gone up. But the bond price now, what they're saying is bond prices are too low on the short end, because interest rates are too high in relation to inflation and economic growth. And so they think buying the short end, you're getting an asset now that is low in price, that is about to rise in price. And bonds can rise in price a lot more than the interest rate that they pay when they're traded around. You can see this right here. This is T10, which is a 10-year treasury. Total return performance after the Fed stops raising rates each and every other time. Boom. So you have the Fed stopping raising rates. You have the 10-year, which is sold off. And then suddenly the 10-year then goes up in price as people expect interest rates to fall. And that is a big percentage gain. Now, this is the 10-year just to show you we're having terrible performance of the 10-year. Why? Because the Treasury is raising so much money in the debt markets, and they're just dumping Treasuries on the long end at the moment. But the short end, this could mean that a slowdown in the economy occurs over the next few months, and maybe a year or so, right? People are expecting Q1 next year. It doesn't really matter at this point. The short end of the curve, people are saying interest rates are higher now than they will be in 6 months. And so on the short end of the curve, people are buying in. And what would they also buy in that environment? Bitcoin also reacts in that environment. Not at the same time, but it's part of the cycle. I hope this makes sense, because as bond prices go up, so may BTC, and the expectation that risk assets get a bid as well. So that's how it goes. Now, the long end's a lot more difficult, but a lot of bond traders are saying on the short end, they expect prices to rise because you're seeing this dynamic play out. And so this is something to trade. Bitcoin and risk may get another bit of a bid under it. And of course, there's many other factors here with unemployment and how big the recession would be and what's going on in the world. And there's uncertainties when you trade at every single point. And so you either buy or you don't. But we're seeing a potential turn in macro, and that's just feeding into the market, plus the ETF, plus the Bitcoin halving next year. It's all happening around the same time. I talked about all of this in the Crypto Investor course months ago. I've been allocating to BTC. If you want to see the Crypto Investor course and all of my research updates, check the link down below. If you're a trader, deposit bonus on Bybit as well, or you can use Apex, which is on-chain, just for more professional traders though. Links in description for all of that. I'm James, Money ZG. Cheers for watching, and I'll see you in the next one.